રિઝલ્ટ્સ આવ્યા પછી વેલ્યુએશનની વાત થશે અને ફર્ધર આપણે એક પ્રોજેક્શન્સની વાત છે.
ઓકે, અસીમજી માફ કરશો, આપણે HDFC ની પ્રેસ કોન્ફરન્સ થઈ રહી છે, HDFC બેંકની, એના પહેલા સાંભળી લઈએ.
From 18,862 to 21,560 crores. Net revenues have grown by 21.1% to reach 12,501 crores. As you know, the largest component of net revenues tends to be net interest income, which is approximately 73% of net revenues. Net revenue growth was again at 21.5% and went from 7,450 crores to 9,055 crores. This NII growth was driven by average asset growth of a little over 19% and a net interest margin which bounced back quite sharply to a core NIM of 4.3%. Other income, which constitutes 27.6% of net revenues, grew by 20.3% to touch 2,865 crores. The largest component of other income tends to be fees and commissions, which grew by 16% from 2,172 crores in the corresponding quarter of last year to 2,523 crores. Moving on to operating expenses. Operating expenses were in terms of growth were held back, and with a growth of 13.9%, which touched 5,220 crores in terms of operating expenses, the cost to income ratio for the quarter was 42.4% as against 44.9% for the corresponding quarter of last year. Provisions and contingencies were up. They were at 1,262 crores as against 662 crores. So that was an increase which I'm sure all of you would have noted. So let me spend a minute on that. So if you look at it, whether you look at it year on year or you look at it on a sequential quarter basis, provisions were up about 550 crores, for instance, on a sequential basis. Of that 550 crores of increase in provisions sequentially, 270 crores were on account of general provisions for standard assets, and that reflected the strong almost 60,000 crore increase in advances during this quarter. So again, of the 550 growth sequentially in provisions, 270, which is pretty much half, came from the increase in general provisions. Of the balance, again, about 100 crores is the spillover impact of what would have been provisions on the NPLs which got spilled over from the previous quarter into this quarter because of the dispensation relating to demonetization which was permitted by the RBI in the last comparative basis between that is the sequential quarter, the December quarter and this quarter. If you sort of push that back 100, then of that balance 250, 270 crores, actually the gap narrows to about 70, 80 crores, which is about a 15% increase. So was there a 15% net adjusted increase on a sequential basis? Yes, but it gets exaggerated by the large increase in the general provisions, which is a result of the loan growth, and the fact that there was this dispensation for small loans less than 1 crore, which meant that about 240 crores of NPLs which did not get recognized spilled over into this quarter, and there would have been about 100 crore provisioning relating to that. That 15% residual growth did come from a couple of products, including SLI, Agri, which were clearly segments that were impacted by the demonetization period, and a little bit from some of the other retail and corporate businesses. So I sort of spent some time there because I guess that's the one number which I know a lot of you had questions about, so I thought I'll preempt some of that. Of course, post provisions, after providing for taxation, the effective tax rate also is a little higher, but nonetheless, post taxation, the net profit for the quarter was 3,990 crores, which increased 18.3% over the corresponding quarter of last year. For the full year, Again, our net profit, strangely enough, has increased exactly at 18.3%. So our full year net profit was at 14,550 crores. This is for the, as against last year's growth. For the full year, again, NIM was at 4.3, and our cost to income ratio for the full year was about 44.5%. Moving on to the balance sheet figures, again, we've seen rather robust growth, especially when you view it in relation to what the industry has been experiencing of late. Our total balance sheet size touched 8,63,000 crores. This is up from 7,40,000 crores last year, as of March 2016. Total deposit growth was at 17.8%. We touched 6,43,000 crores, and within that, both current and savings accounts grew by about 30% each. There is, of course, some hangover of the spurt that had been seen in the previous quarter as a result of the demonetization, but nonetheless, the year-on-year growth in both current accounts and savings accounts remained rather strong at a little over 30%. Fixed deposit growth was at 7.9% for a couple of reasons. One, of course, as you know, in the December quarter, we had a runoff of a little over $3 billion of FCNR, which is part of the fixed deposits. And in this quarter, given the strong liquidity as a result of the strong CASA growth, clearly we had moderated the fixed deposit growth in the March quarter. As we get into this quarter and as we get into this financial year, we of course will be back to normalizing our growth on fixed deposits as well. But certainly last year, with the CASA deposits growing at a little over 30% and fixed deposit growth in single digits, the CASA ratio as of March 31st actually touched almost 48%. Moving on to advances, again, in an environment where the industry advances year-on-year grew by a little over 5%, I think 5.1%. Our total advances growth was at 19.4%. Our domestic advances growth, because again, if you remember the adjustment of the FCNR linked lending in our overseas books, which ran off in the December quarter. So if you look at the year-on-year growth in the domestic loan book, that was even stronger at 23.7%. And if you look at it the way we run the business rather than the Basel classification, which is a function of size and so on, as businesses, both our wholesale and retail businesses, especially in this quarter, grew at almost equal amounts. So the total growth in the loan book was roughly 60,000 crores, and we saw almost 30,000 crore each coming from both the wholesale and the retail loan books. The mix, therefore, as of the end of the year between retail and wholesale is about 53 and 47%, 53 being retail and 47 being the wholesale book. Obviously, capital adequacy came off a little with the strong growth in the loan book, and total cap add was at 14.6%, of which tier 1 was at 12.8%. So still very healthy, but reflecting the growth in the risk assets, which was the loan book. The board of directors have recommended a dividend of rupees 11 per share. This is on each share of 2 rupees, as against 9 rupees 50 paisa per share, which was declared last year. Our network, again, if you might recall, in the first 9 months of the year, we had somewhat limited amounts of expansion in the branch network, but we closed the year with just under a couple of hundred new branches, and we therefore closed the year with 4,715 branches in 2,657 cities, and the mix is now 52-48 between semi-urban and rural, and our urban and metropolitan branches.
દાદા પરેશ સુક્તનકર, અત્યારે આપણે જોઈ રહ્યા છે HDFC બેંકના પરિણામો જે આવ્યા એના પર ખાસ સ્પષ્ટતા આપતા દેખાઈ રહ્યા હતા. ખાસ એમનું કહેવું હતું કે જે